Good morning, everyone. Sorry for that delay. We're going to start right now, though. This is Admiral Markets, and we're going to take a look at the Forex market, of course. First of all, though, there is a disclaimer explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So today we got to focus on supply and demand. And, that is a bit different trading. I mean, normally we take a look at fibs, trend lines, moving averages. This is a bit of a different type of trading. Still, though, so the trend is not that important within this category, nor filters. Actually, it's all about the trigger, I guess, and an entry. But in any case, these steps are normally very important. So that's why. Alrighty, take a look at Admiral Markets in the social media. And with that said, let's head over to the AM website. I'm going to take a look at the Forex calendar. Last week, of course, we had NFP and unemployment rate. NFP was negative. Unemployment rate was very positive. A bit of a funny mixture there. In any case, the euro dollar, for example, went up a lot. The dollar yen went down a lot. So there was, in total sum, was dollar negative. Today we got core retail sales and pound primarily throughout the day. Those would be the most important. Alrighty. So the core focus is supply demand, but I will also, take a look at other things just to make it a bit more comprehensive. The euro dollar seems to be stuck in a triangle at the moment, although it did make that upside after NFP and making higher highs and higher lows now on this 1 hour chart, although just started. For me, from a breakout perspective, both sides could have potential. In fact, although the downside break seems to be a bit limited with the daily support pretty close by, and the upside break would have more space, I think, for a good continuation. That's the 1 hour perspective. On the 1 hour chart, there's not really a supply and demand. So maybe here, let me show you. First of all, maybe good to ask who has not seen a supply demand zone webinar with Admiral Markets and myself, because we had a few of them. So I just want to see if there's anybody out there that hasn't seen one prior to this. So that would be a good question, first of all. But if we look at, if we continue as I wait for your answer, there could be a small one here. It has two tops and bottoms. So that would probably be a good target, a good take profit zone for any upside break, because that could be a resistance zone. We clearly see a downside, sideways, and continue. Prices never returned to that zone, right? There was a clear downside impulse from that green box I have there. Clearly, that's when the downside got more acceleration. Was a bit hesitant until then, but that's when it really went fast. The price never went back to that level. So I see there a couple who've never been in a supply demand zone webinar. So what it basically means is that you're looking for a zone where you have a sideways movement and you have a clear impulse either from bottom or from top. Prior to that, doesn't really matter. But you're only looking for the continuation. So if you had downside sideways box, you're looking for downside continuation. If you had upside sideways box, you're looking for upside continuation. When you have that, anytime the currency then retraces back to that zone, it will be a bouncing spot. So let me give you an upside example. If you have an impulse, if you see an impulse, then you see a consolidation that's tight and has clearly defined tops and bottoms, and then you see a breakout like this again. And if then price moves down back to that zone, there's a high chance that this will become a supply-demand zone and up again. For a downside example, you would need a downside, a box, right? Price is basically, you would at least need two touches here and 2 touches here to have a good consolidation, right? You know what I mean, like this, at minimum. Of course, the longer the better. And then if it falls and then hooks back to it, that would be a supply and demand zone. Other things that make it better is that the stronger the impulse prior to it, and especially the stronger the impulse after it, that's even more important, the stronger that level and zone is. All right? So that is definitely optimization. Let's see, there are other things to look at, for example, the reward to risk. Preferably, if the hook back happens, then you want to measure, basically the entry could be anywhere in this zone. And the stop loss would be above that zone for downside and below that zone for upside, of course. The entry could be anywhere in that zone, in theory. But what you do want to look at is that if you are aiming for the next support or resistance, you would preferably want to have a 3-to-1 R2R, which means you would get well compensated for any loss or any 2 losses. So anywhere where you put your entry, it has to be in the blue zone, but preferably where you enter, the box here is the risk is about 1/3 of the potential gain, wherever your entry order is. So that's something that you also want to keep in mind. So those are some optimizations. So I think that is in play. We do have a very strong downside. This is, mind you, this is a top. Okay, the difference is that we don't have any clear consolidation. What we have here is a fall, a pullback basically, and then again a fall. That's not a supply demand zone, that's a top there where I have the blue circle. So that's the difference. But if we then continue, what we have is a triangle here, then we fall again, and then we have 2 bottoms and 2 tops, and we fall from there very, very, very much. So I would say that that is a potential resistance zone. So if we do break out here, you could trade it differently. You could, one way a person could trade is to take a profit there. Instead of entering at that spot, one could think about a TP at that level. There is some confluence, by the way, at that level, because if we put a fib on this upside, we see there's a -618 right at that green zone. So for me, from my perspective, I know that -618s, I would gladly combine and use this confluence because I know that -618s are strong levels. I know that this is a potential supply-demand zone. So those are nice extras at that level at 137.60. So if that top is used, it could be 137.80 for about a 20 pip stop loss. If a short is taken, or the TP could be placed there to take profit at the optimum spot of this breakout, potential breakout. So let's see if we indeed move up, first of all. But if we do, that could be a potential. Up and then down. For the moment, though, the upside is a bit better in my opinion because we have a clear impulse. It's difficult to trade against an impulse like that because you can bounce at the 50 or 618. You could fall and then bounce again. And it's difficult to take profits so nearby. It's only a few pips away. Now I'm not saying it cannot fall. It certainly can. It's just for me difficult to trade it to the downside. Let me put maybe a different template here on it. You see the moving averages are flat and green, and they're still on top of each other. For me, it's a bit of yeah, I would need a bit more confirmation of downside. I would either have to see a good impulse here, a small pause, then the next break. Then I would have a better method to trade it than now, because at the moment it's just too much set on the upside. Oh, I'm sure. Wei is saying that the 1 hour is bouncing off the 200 moving average. I can imagine. You know, because I can imagine very strongly, because there was a very strong downside prior to that. So that's why I am open to both opportunities, up and down in a way. It's just that I think that the downside needs to prove itself more in this most recent part. If you look at the 1 hour chart, you can see everything is green, all the moving averages are green, and they're also lined up to the upside. So that, to me, is a bit too bullish to start looking for shorts in this zone, let me say it this way. So I would rather wait for a bit more confirmation. Either confirmation above here, or we already broke out of that, so that's not valid, or basically a next break upon here. Not that I would take the immediate break, but I would actually wait for the break, pull back, and continue. Whereas the upside, I would feel comfortable enough to take the break immediately. That's the difference, I would say. And although both up and down on this same pair, the euro dollar, are using the same trigger, both are using a trend line, the entry method differs, right? Instead of the upside would be a direct entry, right? A direct breakout entry. The downside would be actually waiting for the continuation, right? The C part of the break, pullback, and continue. So let me take a look at Wei's question about is this a current supply and demand zone? Well, no. I mean, if it were to break to the upside, I would consider it a support level. Technically speaking, it's not a supply demand because it doesn't have two flat tops and two flat bottoms. One flat top and a flat bottom, sorry. This has a slant to it. The bottoms are very uneven. Now, I mean, from a discretionary point of view, if this flies up like that, then you know, I would consider it still a support level, though, in general. But the rules of this particular strategy would not apply, indeed. Then there's a question about fibs. You can get those minus fib levels, by the way, by going to the properties of that fib, Fibo properties. Go to Fibo levels, click add, then in the level write down minus and then 0.272, and you'll get the minus figures. Minus 0.0618. Every time you put minus, you will get the target above the fib retracements. The values are all, they're the same actually as I'd always use. But I'm not sure if you're aware of those, but I'll write those down. There are 34 EMAs. I'll write that down, it's easier for you, I think. Alrighty. So, is there any supply demand zone in the 50-minute world? Not really. Why? Because these are all bottoms, right? Price dipped down, found support. Price dipped down, found support. Those are bottoms, but not supply demand, because you know, if you look at it from a 5-minute perspective, I'll give you an example of in the past, recent past, of maybe one. Well, no. Yeah, a bit. something like this, potential. I mean, it's not the best one. You have two bottoms here, not an even top maybe. But just to give you an idea. And price then stopped there and turned up again. You want to be careful with the 5-minute world though. I mean, if you use any of these as a potential supply demand, that's very dangerous in a way because of that huge impulse up. You know, it could be riskier to use that as a resistance. Alrighty, back to the hourly, and I don't see anything here. 4-hour charts. Well, in general, you know, from a 4-hour perspective, here there's one. This entire zone, in fact, is a supply and demand zone, in a way, maybe. Well, it's not the neatest, but there is an impulse, sideways zone, and continuation. That's what I was thinking of. Anyhow, that's a thing of the past, but just to give you an idea. One thing we can add is this daily trend line here. You can see that bounce off of daily support plus the supply demand zone. Good reasons for the currency in a way to use as a support. Also, price was very choppy to the downside. It just was waiting for the NFP to push it up again. So we could have a fall, I'm not saying, back to the daily support and then probably bounce up again or maybe eventually break if this were to be a bigger downside, for example. Or we maybe see the upside break right away. Right, so these are the scenarios. And if you look at the 4-hour moving averages, basically you can see that these are pointed up, but this is flat. So we are even on the moving averages in this triangle formation. Good. Let me just quickly answer Mason's question. Mason, supply demand zone is where you have a clear impulse. You have a consolidation that is very tight and has clear defined tops and bottoms. And then you have again a clear impulse to the same direction. So down, sideways down, or up, sideways, up. The stronger the ups, especially after the consolidation, the stronger the entire zone is. After, if then price moves back to that zone, that becomes a supply-demand zone. Those red boxes become a supply-demand zone and are bouncing spots for more continuation in that same direction. So here, for example, we had downside, sideways, downside. If price then hooks back to that level, that would be a supply-demand zone for some downside at least. That could still go up, but that's a potential zone there. Alrighty. The reason why that is supply demand is because basically what happened is that price had a very strong move, which means that there were either a lot more buyers and sellers, or there was a little orders in that movement, right? And price just kept going up and up and up until it found sellers, basically. So it stopped, the price stopped here. What happened then after that is price moved down a bit, moved up a bit, moved down a bit. There could be activity there, but I mean, there's definitely no downside pressure in this case, right? And then price moves up again very strongly, which means that there was, in this case, only demand and no supply. So if price gets back to that, these are levels that basically big boys such as banks have found interest in the currency. Right? That's what it boils down to, why that is important. If price is very choppy like this pound, you won't see many of them because everything retraces each other. All this move retrace, retrace, and retrace, so you won't see much of it. Why? Because all the price is overlapping, right? If price is overlapping like this, then you wouldn't find them that much. So let's take a look at this from a technical point of view. Could still be in this uptrend channel effect if we adjust the channel a bit. But yeah, price is definitely having some downside momentum here. The upside was very choppy and the downside was very strong again. So this could be a channel break or just a channel bounce again. But downside definitely quite strong. There's also a lot of choppiness, as you can see. So recent with the NFP here, we got some downside again. I'm not big a fan of the pound. I like the euro more. At the moment, though, at least, let me say it this way. But a break below red could be an indication of reversal or downside continuation. A break maybe above this line could be a good indication of upside. Or let me make this red, in fact. That's still far. In between those levels, we could actually stay within these levels and make a triangle. There is some resistance probably about halfway. We got the moving averages. We got the broken trend line. We have a top in here. We have moving averages. We got these tops maybe here. So there is kind of a level in there that one could see as resistance. Would I want to trade it? Not really. But yeah, this could be a resistance zone. But it's about halfway my trend lines. I don't like to trade it halfway because I'd rather have price at a clear spot, either at orange or at the bottom of the uptrend channel in black, because otherwise price sometimes gets more impulsive. Price can then push through and reach the top. I don't like to trade it, in the halfway of these zones. If you are bearish and you are hunting for a short, then waiting for some price action confirmation would probably make sense as a minimum confirmation, but yeah, not the biggest fan. Let's take a look at maybe something else. The Aussie seems a bit better to me. For example, this trend line looks pretty neat on the 15-minute world. A break above could be a good continuation of this upside. The Aussie has broken nicely to the upside on Friday. Actually, was more impulsive bullishness than the euro or pound, and we saw that back in the euro odd and pound odd that were falling as well. So this upside is very strong, and a break of this orange line seems very nice to me. So I would like to keep an eye on that one. That would be a good trade, I think. Good trend line, 3 hits, good angle, clear impulse to the upside. So it has everything in it. It was, of course, in a heavy downtrend, but things changed. This has actually broken to the upside. So I don't think it makes sense to remain, with too focused on that. The upside targets, well, if we look at the 1 hour chart, we could put a fib on this entire upside. Let's take a look. Minus 618 and 92. But the thing is, though, that, or if we maybe move this fib from here to here, minus 618 is at 91.50. In any case, on the bigger chart, if we fib the entire downside, the 382 is at 91.80. So I would be more inclined to say if we break above here, but I would say above this top, which is at 94.50, I would say 91.48 is a good target. $91.13 is even more conservative. So 60 or 85. That looks good to me. Alrighty. You can see the upside also now making higher highs and higher lows, breaking out of this resistance line as well, hooking back maybe for more upside. There's a top in here as well, so that's definitely something I wouldn't target above 91.70 because there's a 38.2, there's a resistance spot, so I'll be careful with that. Supply and demand really only has a validity or can be used if you see a zone. So if there's no zone, then there wouldn't be anything to target, basically. But I don't see any supply demand zone actually. I was trying to look, but here we got tops. Also, don't forget that if you have a supply demand zone, it should be an area that hasn't been used yet, right? If the area has been used and then goes back to it, the second time around it's not as valid, or it's less valid, or it's less important. It's primarily the first time. That's something to note. Otherwise, as you can see, this was all very strong fall. So there's no demand zone there. There's no sideways zone there. There's one here, all the way here. That's very far. Price didn't hook back to it. Do you see? It missed it here. There was one smaller here in the past. It was used for that downside continuation. Yeah, I was trying to look for a different time zone, indeed, but I don't see it. But maybe I missed one. If you see one, let me know, but I don't see it. Not on this one in any case. No. You see, we did have a pause here, but it wasn't flat. It was upside, and then just kept pushing forward, so that wouldn't count. So no, let's try to find an example on another chart, but in any case, this Aussie looking interesting to me from a different perspective. So let's see. How about the dollar yen? Let's take a look at that one. So dollar yen making that bigger correction as my wave count forecasted, and that was correct. We are making a bigger correction down to maybe the 38.2 of this entire up move possible. This is looking like a bigger correction, but still the bigger weekly, daily trend, monthly trend are all up. The only thing that has happened is we're getting a bit of a bigger stall, a bigger pause at this current level. Doesn't necessarily mean the uptrend is over. As I said, all these time frames are up. The only thing that happened is a small double top here on the 4-hour, getting some retracement that could easily, sooner or later, rejoin that uptrend again on the lower time frames. So I'm not, considering this a very important downside as yet, because the higher time frames are so much pointed to the upside. I would definitely need more confirmation of downside before trading it that way. And actually expecting upside to continue. Maybe the 1 hour has a small zone. This is maybe like a 15-minute. Let me check. This zone here, that's a 15-minute supply demand zone. Now I wouldn't personally use it because I have such a high respect for the daily, weekly, and monthly uptrend that I would be careful to use it as a downside. But according to the rules, this was a clear, on this time frame, this was a clear downside, this was a sideways move, and there was a clear downside away from there. So that would count. So, and there's a good chance that could become resistance. It's a 50 fib as well. So here too, there's some confluence between a fib, as always, and the supply demand zone. Other than that, let me take a look. No, I don't see it personally. Maybe here's a small one, but that's pretty far away. It's more like a 4-hour window. So no, not currently, not within the next couple of pips. I don't see anything that other than that one that would qualify. So let's see. This dollar yen could easily go and fall indeed from this supply demand zone down to the 382, and guess what's there? Minus 272. So there's a confluence at 102.16 between the 272 target of this correction and the 38.2 of this entire up move. And that's easily where price could continue with this daily, weekly, and monthly uptrend. So personally, I would be looking and hunting and waiting. What I like the best is the trade to the upside from that 38.2. So if price gets into that zone, I would definitely, geared and keep my eyes well open for the bounce there. Kiwi is pushing up, but it's very, very choppy. Right at resistance levels here. So I would be careful, but it is looking bullish. We had an upside retracement and now continuation upside, but it is very close to these support or resistance. So we'd be a bit careful because of that, but could go there and break through a bit. Funny enough, we have actually a potential supply demand zone here being built right now, as you can see. We had upside. What do we have here? Sideways box. So what happens if we break that level? That will become a supply demand zone if we get a good impulse after that. If there's only a wick above it or a few wicks, then obviously it's not the important break that we're looking for. So if it gets a good break, that would become one though. It isn't as yet, but so how about other currencies? That was the Kiwi, Aussie, dollar yen, euro dollar, pound dollar. Anyone else have a preference? I'm just going to quickly make a cup of coffee because I didn't sleep too well. So I'll be back in about 30 seconds. In the meantime, as I warm up the water, let me know which currency you want to take a look at, okay? Yeah, that's true, Jano. That also keeps me awake at when I get up at 5 or 4:45 every day. But I don't know why. Normally don't have much problem with it, but yeah, normally I do go a bit earlier to bed. It was like last 2 nights after midnight, and that's just a tad too much for me. For me, it's 11 p.m. is good. I can still sleep 6 hours. But if it's after midnight, then it gets less than 5 hours, and then it's then I notice the difference. Still no currency preferences? Well, I guess then let's take a look at pound yen. Oh, yeah, I would have. Hmm. There's a yeah. Well, that's too late now. We can still wait for a hook back. I don't know what happened exactly. I was so involved in the supply demand trading that didn't think about actually. It was actually indeed didn't have much space, so the breakout not that surprising indeed. Just didn't think about planning it. Gaps, yeah. Well, it's a small one, 1 pip, but it is funny to see it indeed. It moved up so fast, there's so much impulse that it just skipped a pip indeed. Funny to see that. It is quite a impulsive move up. Was there maybe some news? Let me check. Not that I know of. Looks like a good break to the upside. It's actually a pity that maybe it's still make a retracement a bit. I shouldn't say a pity because you know that's probably the worst thing that we can have is regrets. Only leads to bad decisions. So don't listen to me. Never use a pity or that phrase. Yeah, the pullback would be nice, but looking at the power, I sincerely have some doubts whether this will pull back to a level that I would like to have, like the same price as the breakout, but doesn't look so. This was probably one of those cases where the breakout would have been worth it, but you never know. But there was another question, by the way, I forgot to answer. Where do we get economic report from? I'm not sure what you're specifically looking for. I mean, if you're looking for the economic calendar, you can see which type of news releases are being announced today, if that's what you mean. An hour from now, for example, CPI. Why the euro dollar is increasing? Well, from my perspective, I mean, it would depend who you ask, of course. A fundamental analysis might see Eurozone news somewhere hidden in the news that I probably won't see that fast. Others might see a mixture. Others might see technicals as the primary reason. I'm more a mixture of psychology and market psychology and and technical analysis. Wei is saying that Novotny is saying ECB is fully committed to forward guidance. So that could be a reason. In any case, there's more demand for euro than supply, of course, for whatever reason it is. So, why is also the question is if it's really important for trading perspectives, right? I mean, I'm sure the why is important for many other reasons, but I mean, why it's moving is for the day and bread of a trader. As long as the trader implements their trading plan correctly upon the movements, it matters less. We were saying, that the break from this triangle, preferably to the upside, I mean, or the downside would be okay, but I wanted to pullback, continue, remember? The upside immediate break was okay. Basically, it's just the reading of opportunity, right? There's an impulse, an uptrend, a triangle, then this can happen. Very strong AO reading. Well, in any case, we can still wait for the top of the hour. The top of the hour, we'll see how this candle finishes. It's not the end of the world. At the end of the hour, 26 minutes from now, we will see this candle finish, this hourly candle, and we could see this hourly candle retrace maybe about halfway, for example, or we could see maybe 2 hours of this and then a continuation. That's would seem likely to me. So I would say the best is to let this one finish and calculate the top and bottom of that candle, which is about 43 pips at the moment. So let's assume that halfway is about 21, which would mean around 136.78 is about halfway. So at the top of the hour, about halfway will be here. But let's see, of course, it's not, if this candle finishes like something like this. Of course, if this candle finishes with a major wick on top, then things do seem a bit less interesting for this euro-dollar breakout. Let's face it. So that would be the backup plan. To see if we get a break, pullback, continue here. Let's take a look at the Aussie. Maybe that one is about to break. Yeah, that should be fine. Amdadul. You can also use Admiral Markets 1, of course. Both should say roughly the same. So I'm thinking about an entry order, in fact, on the Aussie above here with a stop loss below. I think that's worth the risk. Ah, 90.50. Stop loss 90.20. And I will aim for 91. Maybe I'll chill stop it for the moment. Chill stopping it using 15-minute fractals. Good. Let me also punch that in a different account of mine. 1 second, folks. So there you see it. For those of you, if you're interested in that, that's the AUD buy stop. I have it at 90.50 and a stop loss at 90.20. And a trailing stop. And then I'll take a look at the euro dollar, the top of the hour, to see if we have some potential for a hook back, for example. All right. Almost there. Just need to finish that other one. Sorry about that. All right. Any questions, maybe? No? Okay. Good. Well, let's continue then. Let's see if this indeed, first of all, breaks, and if so, by how much, and how fast, and which direction. Euro dollar is still hanging about there. Yeah, probably. Let's see. It could still push a bit this hour, but I think that this is a pretty good impulse breakout candle as is. So if it doesn't change all too much, as I said, then we could look for a small retracement of that. So let's see. 50-minute chart. AMDA dual is a good chart. There's nothing wrong with that, definitely. Yeah. That's why we're saying also, like, these moving averages are all bullish and positive. So the upside breakout therefore looked better to me than downside. Yeah, news is always something you have to be careful of, indeed. Yeah. Dollar Swissy, nothing really that interesting at the moment. We're talking about pound yen, in fact. Let's continue with that. Daily chart is an uptrend, obviously, but price is moving down at the moment. Let me get rid of these lines. You can see strong uptrend. Price is back at moving averages. There's a lot of support trend lines we could draw on this chart. In fact, some of them have been broken, obviously. This was a very, very strong up move. So this could still be a pullback for more upside. It's not impossible, especially if you look at the oscillator on the daily. So this downside, even though we're in a downtrend, it could have its limits. Don't underestimate support levels like this, for example, either, which could be proved to be a bouncing spot for more upside. So that is possible. 1 hour charts, we had very strong downside, but it could be still a correction. We got some supply-demand zones in here, in fact, but as I said, you could definitely improve the whole equation if you look at the trend. There's one problem with these supply-demand zones here, is that they're quite small. The bigger the box, by the way, I forgot to mention it, the bigger the sideways move, I think I forgot to mention it, the more powerful that zone is, and also the more impulse out of it, the more powerful. These are quite small on the 1 hour chart. If we zoom into the 15-minute chart, then we got good supply-demand zones, right? The only thing is, though, that as we know, there could be a bullish rebound off the daily, and then these zones will not hold, nor would this one, or might not hold. But they are classical examples of supply and demand. Obviously, the time frame matters as well. Obviously, the higher the time frame, the more stronger the zone is. These 15-minute ones are relatively easier to break and weaker, especially if they're small on the 1 hour chart like this. So for me, I'm a bit cautious here because I see a potential for a daily rebound, but I see also a 4 hour downtrend. When those two are sometimes not that much aligned, or potential misalignment, then there's nothing wrong with waiting a bit. If there would be a very, very good, clear structure here, but this was up, down, up at the moment. If anything, we could be running into resistance, though. I would be careful. There is a potential for resistance. This is still a very impulsive rebound. So I'm cautious of both sides at the moment. That's basically what I want to say. If you look at this impulse, though, this is very strong. There's definitely a chance for the currency to go to the minus 618 at 170.60. 170.60, of course, does have bottoms here as well. Plus, it's the supply and demand zone, so that could be the resistance spot for some downside after that. So I'm going to wait in C mode on this pound yen at the moment, but I wouldn't be surprised to see it some upside to 170.50 and then maybe down. All right, so give me sorry for this interruption. I just finished that coffee and turned on the heating. In fact, sorry about that. Alrighty, folks. If you have a favorite, by all means, let me know. Otherwise, we'll look at the euro-yen in the meantime. Daily chart. It, to me, it seemed to have a bit of a supply-demand zone, but it, you see that they don't always work. Of course, I mean, it's not that this is a ironclad guarantee, but this was a bit of a supply-demand zone. We had an upside, sideways upside. Here you can see that price did stall at that level, but then broke through it. So, they don't always work. This one didn't work. And we're in a downtrend on the 4-hour chart. Still an uptrend on the daily, though. And we're getting on the Europe yen also a rebound. I think probably the euro yen would be roughly the same scenario, right? We have basically a strong impulse here as a first correction. That too could easily go to the minus 618 and these bottoms. Then we'll probably see either a reversal or a small bull flag. If it's a bull flag at the minus 618 target, the next break would be actually very, very, very nice for the upside continuation. That's probably my preferred method of tackling this, the euro and pound yen, I would say. Let me get rid of the supply and demand zone. It's not valid. You see, we're still above resistances, but if we move up and then show correction, the next break would be really okay. So those are the EJ and GJ. Let's take a look at dollar CAD. If I can find it. Alrighty. Dollar CAD. Yes, well this in a way is a supply demand zone because it has a very strong impulse prior to it and after that. So if price were to hook back to the level, this entire zone becomes definitely support for an uptrend continuation. But of course price is pretty far from that, but so not that will happen maybe soon, but if it does, then you have an example here. Wei is questioning where would I buy on a pullback on the dollar CAD. Let's take a look. This is the weekly chart. We still got some space to the minus 272, indeed at 110. Getting pretty close to that. We're also pretty close to the top of this uptrend channel, in fact. Let me see if that's correct. Well, to me it looks like it's difficult for me not to see this as a pretty high spot already, but that's just my mentality. I like to take the breakout. If it's I like to see a trend, but if there's been a strong move up and it's close to certain resistances, then I am a bit more cautious than upon the first or second breakout. At this point, I would be a bit more cautious because of that. So that's just my view. But if from the 1 hour perspective I do get a good trend line, for example, maybe like this, could be still a good breakout. A pullback would have to be pretty good pullback indeed. Maybe this 382, for example, is an option. If price were to go back to the 61.8, that would be lovely, but as I said, that doesn't seem too likely at the moment. Amdadu, I don't actually do that. I have no means or, tools to do such a prediction, nor would I actually use such a prediction because I'm trading. I'm not trading, options or something like that. I'm just trading spot prices here. So what I'm looking for is for certain levels to break, and I'm targeting certain levels. So, way to finish your question, I think probably either a one more move down to the 38.2 or probably a break eventually are the only two things I could see at this moment left, I would say, until we reach 110. That seems to be for the moment the target. Richard, show me how to find supply and/or demand zones? What do you mean with find them? Do you literally mean the process of finding them, or do you mean like how they look like from a theoretical point of view? How does one look like? How does it look like in general? Or do you mean, how does one look like in real life? Or do you mean like the process of finding one? Well, what I do is I start with any time frame. I start with current price and I start to look backwards. And what I look for is basically a area that is going sideways, that has flat tops and bottoms, at least two. But then I also need to see impulses. So, you just scan the candles for that, for these characteristics. Eventually, you don't have to scan anymore because, for example, you don't have to scan these prices because it's always what is relevant is the price that it must be new price territory. So everything above this level, this bottom, we don't have to check any of this here because that's all out of play because basically anything above and behind this has already had a recent price action after it. Supply demand zone is always fresh. It's a zone that hasn't been hit for ever since recently. I mean, let me say it this way: it's a fresh zone where price shouldn't have retraced back to as yet. Otherwise, it doesn't count as a new zone. So it makes only sense to check price below it with candles below it here. Anything above here at the moment has no sense to look at. It doesn't make sense to look at those candles. So when we scan this entire downside, we don't have to look at these candles anymore for a current supply and demand zone because it's all overlapping, and overlapping price action doesn't count. So basically anything below the second red line, this 105.89, is new, is price action that we want to check for supply and demand zones when we reach this bottom. Does that make sense? So we can check these candles, but these candles we don't have to check anymore because those are all behind these candles, and then we can check these candles again. We want to check the price action that is not hidden behind the price in a way, future price. Does that make sense? Amdadul. We talked about it a few times. It's this. You have an impulse. You have a sideways zone and an impulse. The bigger the sideways zone and the bigger the impulse after the sideways zone, the more important the level. If price then retraces to it, that is considered the bouncing spot for more upside. Okay? So that's what we're looking for. If you meant it differently, your question, I don't know exactly what you meant with define maybe, but this is how you define it. So maybe if you have follow-up questions, let me know, okay? But that is the supply and demand zone. Ah, that's a pity, Björn. Yeah, you mentioned gold earlier on. Sorry about that. Oh, Jano mentioned gold earlier on. Sorry. Let's take a look at that. Sorry, Jano. Forgot about that one. Alrighty. Well, we had a break of the downtrend channel, break to the upside, and we bounced on the 31st of December with a pin bar here on the 4-hour at a double bottom spot. So obviously that double bottom, we got some upside continuation, and well, we're still in that upside continuation in fact, but we are in a bit of a resistance zone in my opinion. You see those red lines there? Those are definitely zones that we want to be careful of lines or areas, because those could be heavy resistance for price to push through to the upside. So yes, we were in a very strong downtrend this entire 2013. This was a tremendous fall, a pullback, and continue. But the downside has been relatively slow. And now that we've broken out of this downtrend channel and hooked back and go up, we do see some reason to think of an uptrend. But the only thing is, though, is that we are at resistance. So if I would be trading gold, I would wait for either a hook back to this level for a bounce up, or maybe even wait for either a bounce or break to the downside. I'm going to delete that Aussie order, by the way, just in case you also had it, because I'm keeping an eye on it. And we're actually getting, we're not getting a follow through at the moment. We're actually pushing to the opposite side, so we're not getting that break that can happen. This break that I was talking about right there, actually we're pushing through the opposite fractal, as you can see, which means that, well, I'm back in the waiting mode, because I'm not saying that the idea is still valid in my opinion. I'm still looking for that. It's just that the specific trade parameters, of course, have changed. The stop loss is invalidated because the potential stop loss, because prices push through it. So, you know, the whole trade entry method in fact has changed, and therefore requires deletion of the pending order, and that's what I just did. Obviously, the whole trade idea, in my opinion, though, still valid if we get that pushed up, right? Obviously. But from a practical point of view, I have to wait a bit now. moving down pretty fast, in fact. How about the euro? 3 minutes ago, there was an hourly candle finished, so let's take a look. As we said, it probably will not go all too far. It is already a good bullish candle, signaling a breakout, so it didn't necessarily expect the immediate continuation. And we've had 1, 2, 3, 4, 5, 6 candles. This could retrace back down again and then bounce. It also could actually bounce, for example, after a more shallower fib, so that's something that maybe remains to be seen. Let me put a fib here. This itself could already be a bouncing spot. About 45 pips towards the target, and the stop loss would have to be around, yeah, preferably below this 1 hour bottom, which is at 136.47, which means that it's about a 38 pip. I guess it depends. I probably will wait just a bit more and try to see if it could retrace back to the 50 or 618 to make the reward to risk a bit more tempting and appealing regarding its ratio. Well, I guess we're getting close to the end of our webinar here. Any questions you would like to ask me still before we push off? I'm thinking if we missed anything important, any currency pair that you would like to still look at. The dollar index, maybe we can take a look at together. Dollar index had a downside day yesterday. Pretty choppy though in total on the 4 hour and daily. That's a good question, in fact, because the way is asking why don't I buy Kiwi instead of Aussie. Kiwi is apparently much stronger. That is true, actually, because if you look at the Out New Zealand, this is in a downtrend, right? So it's a good point. Well, the reason is that I'm looking at the charts individually here, and I'm assessing them on their own merit. That's the answer, basically. And to me, the Kiwi, however I look at it, is close to potential resistance. So for me, that would be one of the reasons why I don't want to buy it, whereas the Aussie is not a resistance, and I see, you know, a good space if we break. So that's why. But, you know, the thing is that I guess it didn't break it, so in that regard, no harm lost in a way. But it's a good question. There's definitely merit in looking at crosses indeed for that. But I do tend to put more emphasis on the individual pairs then. But if I have doubt, I definitely take a look at the cross as well. But maybe because I didn't have much doubts here that I didn't look at it. But yeah, the Aussie, let's go to the Aussie New Zealand. It is in a downtrend, that is definitely true. And price action is very bearish. I guess the only thing is that there is a potential support here at the double bottom at about 10 pips away from now. So that could be a reason for the price to potentially stall here. It could break through, but there is an argument to be said that the price could stall at a support level like that. So personally, for example, I wouldn't short the Aussie New Zealand at the moment because it's too close to support. I wouldn't go long either, but I wouldn't go short either. But yes, it is in a downtrend. So it's funny how those things work sometimes. Dadul, of course, definitely tomorrow we have, good question by the way, tomorrow we have a good webinar again, I hope. I hope you will enjoy it. This is on a different topic though. Actually we have more webinars, but tomorrow we have intraday trading on the 15th. Tomorrow though, not only that, but we have expert advice from Toronto, by the way, at 5 p.m. GMT, that's in the evening. And then Thursday morning we have the same live trading session with Fibonacci. And then Thursday evening we have scalping the Forex market. You can sign up by going to admiralmarkets.com, going to education and clicking on webinars and clicking on the sign up button here. Brian has a great question. What is the ideal time frame for supply and demand trading if the pattern is spotted? I think you can really use it almost on all time frames. I wouldn't recommend maybe 1 and 5 minutes because I've never done that, but even a 15-minute can work out. The only thing I would probably like to add is that if you use the 15, you definitely want to make sure that you're not viewing a bull flag, a part of a bull flag, as a resistance spot for maybe downside. I mean, sometimes those do work because the bull flag continues down, but you just have to be aware that it could break to the opposite side, and that sometimes has its risks. So that's all. I mean, meaning that the 15-minute trend might be useful to add. Other than that, 1 hour, 4 hour, 1 hour is great. 1 hour, 4 hours is probably a tad better though. I think that daily, weekly are just too infrequent to really use. Of course, if we bump into them, there's nothing wrong with that. I'm Dadu. I'm not really well, I'm not at all actually a fundamental news-based trader, so I would not be the best one for that, unfortunately. Pound CAD is rebounding as well. That looks pretty bullish. I guess anywhere here we could see some resistance. If we do, I wouldn't be surprised to see a bit of a resistance. If we do break the next time, that could be a good breakout trade to the upside. So that's something to keep an eye on. The CAD weakness is something that might be interesting of today. Yes, that is true. Yeah, that's definitely true. I definitely look at the calendar to see what's coming up and what's going on. That's definitely recommendable. Sure. Well, folks, I guess that will wrap it up for today. So thanks for being here and joining me. And yeah, let's see. My watch list is probably at the moment more configured to the euro and What was the second one? The odd at the moment. But this cat could be interesting as well. Anything else? Yeah, at the moment, I guess that would be it. Hopefully tomorrow we'll see some more. Well, in any case, if you have any questions of supply demand, you don't have to necessarily wait. You can ask them tomorrow or Thursday, no problem at all. I can answer those. If you practice that a bit today and you have some questions still, of course, I can definitely look at that, even if we're officially looking at Fibonacci trading, of course. So let me know how you find that, and in the meantime, wish you all great trading. Cheers, everyone.